Secretary Yellen, I get to talk to one of the leading experts of the economy here. So now I want to talk about this here. Okay, so now President Biden has now brought down inflation, and now last month over 350,000 new jobs, right?
Yes.
And the economy is growing at 3.3%, right?
Yes.
Okay. Unemployment is now at 3.7%.
Correct.
That's pretty good, right?
And it's the longest stretch under 4% in 50 years.
Yeah. In fact, that was 36 months of job growth, right?
Yes.
Yeah. Wow. And of course, real wages are up too.
Correct.
Yeah. And then now the Dow and the S&P 500 are now at record highs, right?
Yes.
Oh my gosh. So the Dow was over 38,600, 3,600. And the NASDAQ is almost 16,000, right? That's those record highs. And is it fair to say that our economies and our economy and the recovery is really the envy of the world?
We're doing better than any other advanced country.
Yeah. So yeah, and actually, when I drove myself back to D.C. from Pittsburgh this week, I was able to gas up at under $3 a gallon. We're not talking about gas prices anymore. But now I want to now put that is like now some randoms on TikTok put up videos at McDonald's that they can rig a $16 extra meal. So what is really more reflective of our economy right now? Some kind of a TikTok about McDonald's, or with all those other kind of statistics that I've just been discussing over in this question?
Well, all the statistics you mentioned are highly relevant and by and large extremely positive. It is true that the level of some prices that are important to consumers have risen since the pandemic. One of those would be rents. Food prices are somewhat higher, new and used vehicles. But wages have also gone up. And now inflation has moderated very substantially. And in fact, by the measure that the Fed pays the most attention to, inflation over the last 6 months has been running at 2% at an annual rate. And wages are now going up substantially more rapidly.
2%? 2%?
Is the Fed's target.
Oh my gosh, yeah, wow. Yeah.
So prices are not rising rapidly anymore. Wages continue to. The number I tend to cite is that the median worker in the United States can buy the same typical basket of goods as in 2019 and have $1,400 left over to spend or save.
Yeah, and again, it's remarkable that now people want to talk about some random extra meal at McDonald's for $16. Which really is a rigged situation. But now any fair experts would say that our economy is the envy of the world. And now, what's lost in translation in our national conversation about where we are literally, in our economy versus now some of the other discussions in other parts of the media?
Well, I mean, we do see much more positive surveys of consumer sentiment in recent months since inflation has come under control and wages are rising more quickly. When Americans are polled and asked about a recent poll asking them about their own personal financial situation, more than 60% said they felt good, and more than 60% said they thought 2024 would be a better year. Now, sometimes when people are asked about the economy and how other people are doing, they seem more negative on it, but they're own assessment of their own situation, as well as their behavior when it comes to spending or starting small businesses. We're seeing really record small business formation, and that's something that only really occurs when people feel confident about the future of the economy.
Thanks, Senator Fetterman. Thank you.
I did give her a shout out. Like, great job. Thank you. Anyway, so I'm out.
Thank you, Senator.
Thank you, sir. Senator Haggerty, if you'd like to also give her a shout out, I'll give you an extra 30 seconds.
Thanks, Mr. Chairman. We'll see where we land with this. Welcome.
Or more important, if you'd like to give me a shout out, you'll get an extra minute.
I understand. Secretary Yellen, welcome back. Last week, the Treasury outlined its debt issuance plans for the upcoming quarter, and it included some unexpectedly optimistic net funding estimates. And so I have a few questions around that, if I might start there. First, can you explain the Treasury's elevated reliance on bill issuance, which obviously is more costly to the American taxpayer? It's certainly more costly than using notes or bonds right now. Is it because you've got concerns about demand for long-dated instruments, or is it more that you're trying to time where the Fed might go with its rate cuts?
We rely heavily on a regular and predictable schedule of auctions, and we
I understand that. I'm talking about the mix of what you're...
We never try to time the market. We are in there for the long term. We want to make sure that there are not significant surprises for market participants, and so we have quarterly refunding schedules that are well considered and follow that principle. So
I understand, but shortening the duration of the curve, where you are on the curve right now, very short. What's the thought process behind that?
Well, we're close to the proportion that has been recommended by the Treasury Borrowing Advisory Committee.
Does close to mean you're shorter or longer than the recommendation?
I believe we have a slightly higher short-term issuance, but
Let's come back to the optimistic funding estimates themselves. The estimates for this coming quarter, I thought they were just released last month, is unexpectedly high. I'm wondering what's driving this next quarter's increased estimate. Is it strong fiscal inflows that you're expecting, or is it merely tax receipts? Is it something structural that you see in the economy that's causing your projection to be higher for this coming quarter?
I can't give you, I need to come back to you with the details. I know we have actually lowered our estimate of the amount that we'll need to borrow in the first quarter. At our quarterly refunding, we indicated we expected to borrow $760 billion in the first quarter and a lesser amount in the second quarter. And actually, this estimate is lower than what we had expected.
No, it's more optimistic
in
as a
October.
result. And I'm just trying to understand what you anticipate is driving the inflows and why it's just this quarter, why it wouldn't manifest itself in the coming quarters, why those estimates happen.
Well, there are patterns that depend on when we get tax receipts. So as tax receipts come in April, there's less need.
So you're more optimistic the tax receipts will be higher than originally projected?
I'm not, I don't want to, I need to look into it, and I'd like to get back to you with the details.
Let's go to another area. You and I have talked about this before. It has to do with the politicization of what's happening at the Treasury. On multiple occasions, you and I have talked about it. Now there's an IRS contractor that has been actually sentenced for this, leaking confidential tax information belonging to the president, belonging to private citizens. The presiding judge appropriately referred to what happened as illegal, and he said, quote, "It was an intolerable attack on our constitutional democracy." And I think exploiting the IRS for political purposes is deeply concerning to every American. And in previous hearings, you've referred to this illegal act as very damaging. And I want you to just let me know if you still stand by that statement.
I do. I believe that protection of personal taxpayer information is utterly essential.
Yeah,
And we're devoted to it. And I know that, although I can't give you the details.
I agree with you on that. I just want to point out one thing that deeply concerns me, because even more damage continues to be inflicted on the credibility of the Treasury. If you think about last month's revelation that FinCEN, that's a bureau that's under your watch, directed financial institutions to flag customers who demonstrated, quote, extremist indicators, like the words Trump or MAGA, or whether they made transactions to purchase religious books. This time it's not just an IRS contractor doing it. This is the administration itself taking personal data to target its political foes. Secretary Yellen, do you believe that people that purchase Bibles are extremists?
Certainly not. I want to put this matter in perspective. First of all, FinCENs' mission is to safeguard the financial system from illicit use, to combat money laundering, terrorist finance.
Certainly not to target Americans for purchasing Bibles or voting for Donald Trump.
FinCEN is expected to work closely with law enforcement and financial institutions on their money laundering detection programs. And so there are interchanges and conversations between FinCEN and financial institutions. And I believe that the matter that you are referring to dates back to before my time as Treasury Secretary and in the aftermath of the January 6th attack on the Capitol. Starting in the Trump administration, there were efforts to work with financial institutions to determine what had happened and to work with them to provide relevant information.
And purchasing a Bible is relevant information to determine that these people are extremists. It's ridiculous. It's a shame.
I will get back to you with more detailed information when I've had a chance to study this thoroughly. I want you to understand that this dates back. These were conversations between, I believe, staff at FinCEN and financial institutions that is the purpose of FinCEN. And so the details, I promise to thoroughly investigate.
Thank you, Senator.
Thank
you, Senator
bureaucracy is
Haggard.
under your charge.
There are a number of things happened between January 1st and January 20th of 2021. Senator Van Hollen's recognized.
Thank you, Mr. Chairman. Welcome, Madam Secretary. Thanks for all the work that you are doing. And I do want to talk a little about the economy and just ask you to reflect on where nonpartisan groups like the Congressional Budget Office predicted we would be in terms of unemployment today, back around the time the president was sworn in, when the pandemic was really in full swing, the economy was hurting, and before we passed the American Rescue Plan.
I must admit, I can't remember the precise numbers, but the impact of the pandemic was expected to be very severe and to last a very long time. And the U.S. economy has done an order of magnitude better than would have been expected by CBO or other forecasters back then. And I do believe that Biden administration policies have played a very important role for that good performance.
Well, it's exceeded all expectations, and as you said earlier in your testimony, certainly surpassed any of our other partner economies around the world. I would like to talk a little bit about the price issue, and you mentioned the supply chain issues, creating bottlenecks that led to price increases around the time of the pandemic. There's another factor at work, I believe, when it comes to high food prices now, and I think the president has spoken to this somewhat, which is the price gouging, in the sense that the profit margins of some of the big grocery manufacturers today exceed their profit margins before the pandemic. Is that an accurate statement?
I believe it is. I believe the Council of Economic Advisors has looked at this. I haven't personally reviewed that data, but I think that is true.
Which is one of the reasons the president's been so focused on going after price gouging in all its forms and junk fees. And I know the Treasury plays some role in that. Is that something you and your team are working on?
Well, we participate in economic discussions and policy making.
Absolutely. Well, thank you for the role that you are playing. If I could just ask you about investor advisor reporting requirements, because you're often before the appropriations subcommittee that I chair, the FISG subcommittee, and we've had this ongoing conversation about the fact that you've got Russian oligarchs and other kleptocrats who have used investment advisors, including private equity and venture capital and hedge fund managers, to attempt to clean their ill-gotten gains. Now, you mentioned already the fact that we had the beneficial ownership law. I understand that just yesterday you've included some folks within the real estate area. But can you talk about progress you're making in this broader area of investment advisors? Because it is important that we try to close one door, but it doesn't do us any good if it leaves the back door wide open.
Well, investment advisors is a financial sector that hasn't been uniformly covered by AML-CFT requirements. There are some investment advisors who are brokers or may be covered by some rules, but there are certainly investment advisors that are not covered. And our risk assessments show that that is an area that provides an avenue for sanctioned individuals, for criminals, and the like, to move wealth and invest in the United States without the sources of their wealth being detected. And
so are we making progress in terms of developing a rule to close this loophole?
Yes, we are. Absolutely. We expect to issue such a proposed rule soon.
Good. In my remaining time, I just wanted to ask you about the outbound investment proposals the Biden administration has put forward to try to prevent very capital from the United States helping to invest in China's military. This is obviously an effort that requires cooperation from our allies around the world. Can you just provide an update on where that effort stands?
So in response to an executive order, Treasury prepared a notice of proposed rulemaking, which it issued, that asks a series of questions and proposes both information gathering and some restrictions, indicates it's contemplating restrictions in the areas of artificial intelligence, semiconductors, and quantum computing, areas that seem to have a clear nexus to national security risks. And we've received comments and hope to come out with a notice of proposed rulemaking that takes account of the comments and closes down channels. I mean, we have export controls and other controls, but these outbound investments can be a way of providing aid to China's military or other countries of concern that need to be closed down.
I appreciate that, and just want to make sure we're also coordinating with our allies, because again, it's important that we do this in coordination. I think you would agree.
Yes, we are. We have worked very closely with our allies and are urging them to adopt similar regulations.
Thank you, Madam
Thanks.
Secretary.
Senator Vance from Ohio is recognized.
Thanks, Mr. Chairman. And Secretary Yellen, thanks for being here. I actually wanted to ask about something that's probably pretty far afield and you've stopped thinking about, but we haven't got a chance to talk about, and that's the SVB collapse and sort of the run up to the acquisition of SVB by JP Morgan. Yeah, I want to sort of start just with a kind of a basic question. So to recap, the systemic risk exception was triggered for the SVB situation, which was clearly pretty dire, pretty significant. Because of the systemic risk exception was triggered, the FDIC effectively engaged in what I would call a bailout of the uninsured depositors, but whatever term you want to apply to it. The uninsured depositors were made whole. Obviously, the shareholders were not. But the argument, of course, is that that somehow prevented a broader panic or bank run in the markets. And I'm curious, Secretary Yellen, if you could just take me back to that decision coming up on a year ago. Why did you think, given that SVB was so focused on obviously the technology sector, the venture capital sector, a sector I know well, why did you think that it posed a systemic risk to the economy, or why did you and the broader board decide that?
Well, we were concerned about contagion to other banks. And the source of the problem, I mean, there were really two things that affected Silicon Valley Bank. One was losses, mainly unrealized, but nevertheless obvious losses from a failure to manage interest rate risk properly. So interest rates had risen substantially. This firm had purchased longer-term assets, the value of which fell in a higher interest rate environment. And that was a risk that affected many banks in the United States. So that risk was not in any way confined just to Silicon Valley Bank. Many banks suffered similar losses. The other issue is that Silicon Valley Bank relied very, very heavily on uninsured deposits. And now we saw a pace of runs that was beyond anything.
Understood.
But other banks also, we actually have quite a high level of uninsured deposits in the banking system. And many Americans may have felt if depositors, uninsured depositors at SVB were haircut or their funds were immobilized in a resolution, that the same thing could happen to them at other banks.
Understood. So just one follow-up question to that, and if I have time, I'll ask about the CFIUS review of Nippon Steel acquiring U.S. Steel. But just quickly on this, if you could. So my understanding is that there were multiple bids when the SVB collapsed. There were multiple bids that were on the table for acquiring SVB and sort of its assets. At the time, the public reporting suggested that the difference between the J.P. Morgan bid and the next best bid was $20 billion.
I believe that you're talking about First Republic that went to J.P. Morgan, Chase?
I'm talking about SVB. Didn't SVB go to J.P. Morgan? Sorry, First Republic. You're right. My understanding from based on the public reporting is that there was a $20 billion difference between the best bid, J.P. Morgan's, and the second best bid for First Republic. Some of the follow-on reporting and some of the private conversations I've had and my staff has had suggest that the difference was about $1 billion. So two-part question. Number one, what was the difference?
So in terms of the bids, I didn't see those bids. There's a question for Marty Grunberg, who's head of the FDIC. But I will say under the law, the FDIC is required to accept the highest bid that reduces FDIC losses as much as possible. On the details of what the bids were, you'll have to consult with him.
So I guess the worry is, I'm very worried about the three-tiered banking system in our country. You want small, medium, and large banks. Obviously, we have the GSIBs, but I also want a healthy banking sector below the GSIBs. And my concern here is that we actually didn't care enough about concentration in how that transaction manifested itself. And I guess the simple question is that because you didn't have the tools to analyze that transaction with concerns about concentration, or is that because you had the tools and just didn't use them?
So let me first say I share your concern and believe it's important to have a diverse banking system. I believe there were a number of bids by different banks for SVB and for First Republic. And as I said, I believe under the law, the FDIC is required to accept the bid that results in the smallest losses to the Deposit Insurance Fund.
Understood. Thanks.
Thanks, Senator Vance. Warnock of Georgia is recognized.
Thank you so very much, Chair Brown. It's been 14 years since the passage of the Affordable Care Act, yet 10 states, including Georgia, have not fully expanded Medicaid. Let me be clear, closing the health care gap is the right thing to do, but it's also the smart thing to do. It's good for our economy. In fact, a recent report from the Council of Economic Advisors concluded that Medicaid expansion increases the disposable income of those gaining health coverage. And for those who are listening and watching, I want to be clear that when we say expansion, we're not talking about a new program. We're not talking about spending additional dollars. We're talking about the fact that citizens in states like Georgia don't have access, that they're subsidizing health care in other states while their hospitals are closing. But the Council of Economic Advisors pulls into sharp focus the importance of this, the ways in which we can allow hardworking families to spend less on health care and more on essentials like food, diapers, and school supplies. Secretary Yellen, thank you so much for being here. Can you discuss how state economies have improved post-expansion, specifically compared to non-expansion states like Georgia?
You're talking about in terms of uninsured, uninsured individuals?
Yeah, how the states that have expanded Medicaid, how that expansion has improved the economies of those states juxtaposed with states that are non-expansion states.
I honestly can't give you numerical assessments of that. I haven't done that, but generally states that have expanded Medicaid have done better, and certainly the households in those states, and especially lower income households, have been relieved of burdens that allow them to spend more to support themselves and the economies of those states.
Here's what we do know about closing Medicaid coverage gap in Georgia. If we were to close that Medicaid coverage gap in Georgia, it would mean $1.2 billion in additional federal support that I secured through the American Rescue Plan Act. That money sitting on the table, 600,000 Georgians in the Medicaid gap. It would mean 56,000 new jobs every year, with 12,000 of those in rural communities. And it would mean $6.5 billion per year generated in economic output. And so I'm hopeful, I remain hopeful that Georgia lawmakers will do the right thing for Georgians and close the health care coverage gap. I want to move on to another topic. The child tax credit and the earned income tax credit, which I helped pass through the American Rescue Plan, was transformational for millions of Americans, reducing the number of kids living in poverty by more than 40%. All in all, these provisions collectively lifted nearly 10 million children above the poverty line or just slightly below the poverty line. These funds help Georgians buy essentials like food, diapers, a coat for their kid, life-saving prescription drugs. But unfortunately, these provisions expired and we lost the dramatic gains we made in combating childhood poverty. The 2023 FSOC annual report noted that while consumer financial health remains positive, we are seeing recent indicators of falling savings and rising credit card and auto loan delinquencies. Secretary Yellen, the child tax credit was a tax cut that put money in families' pockets. What economic benefits do we see from policies like this that focused on reducing childhood poverty, including on families' ability to save?
Well, I think it had an utterly dramatic effect on households. And as you mentioned, it resulted in a massive reduction in child poverty. It fell in 2021 to, I believe, 5.2%, which is the lowest on record. And of course, it means that families had, many still struggling because of the pandemic, had the resources to support their children, make sure that they weren't deprived of the food and other support that they need to go on to lead good lives and be productive members of the workforce as they get older. And, you know, many of these payments went to families that were in dire need. It's a tremendously important support.
Well, thank you so much. I'm very much in favor of tax cuts for working families. And this is why we've got to restore the child tax credit. And this is why the enhanced child tax credit found within the Bipartisan Tax Relief for American Families and Workers Act is an important first step. And I hope we can get that legislation passed soon. Thank you so much for your
Thank you, Senator.
Thanks, Senator Warnock, and thank you for, soon after you came here in 2001, we passed the most important attack on child poverty in decades, and thank you for your leadership role in it. Secretary Yellen, thank you. I know that this committee hearing and the preparation time for a hearing like this takes a huge chunk out of maybe the most complicated job in the federal government, certainly one of the most complicated. Every week, it seems, we learn about another responsibility that the Treasury Department has. So thank you. And thank you in light of what Senator Warnock said. I remember, and I still talk about the call I had with you after the president signed the American Recovery Act, and we passed it on March 6th. He signed it within a couple of weeks. Our conversation, you immediately brought in Commissioner Reddick, who was a Trump appointee, but who was reasonable and professional, and we got that moving. And by July, checks went out to the families of 60 million children, 2 million of them in my state. It changed the lives of so many, and it would change the lives dramatically if we could renew it as we're trying to do in a tax bill now. But thank you. For senators who wish to submit questions, those questions are due 1 week from today, the 15th of February. Then you will have 45 days, you and your staff, to respond to any questions. Thank you so much for your public service.